Hi everyone, thank you so much for joining us today. We are going to begin our next session today. We will be discussing the next phase of cross-border payments. My name is Emma Joyce. I am the Senior Managing Director of GBBC Financial Services and Head of EMEA, and it's my absolute honour to have such an incredible lineup of panelists with me today. I'm going to hand over very shortly so that they can introduce themselves. As the world becomes more interconnected and methods of storing and moving money evolve, the method by which cross-border payments are made has the opportunity to evolve as well. So that is what we will be discussing today. Today I'm joined by Eric, Daniel and Todd, and I'd like them to take a couple of minutes each, please, to introduce themselves. Starting with Daniel.
Should I go first? Okay, wonderful. Thank you. Thank you for having me. Let's start with that. I see a lot of familiar faces, some faces that I recognize from little circles online, so it's nice to see you in 3D. You're much better looking in real life. So my name is Daniel Eden. I'm an advisor and solution architect with the BIS, the Bank for International Settlements, and I work specifically in their innovation hub. I've had a previous role with the innovation hub out in Hong Kong, where I led Project Enbridge for a little while, and I've recently relocated to the wonderful and beautiful Switzerland, where I'm part of the Swiss Innovation Center. So for me, this is just a nice local conference. I've spent about the last 5 or 6 years working specifically on payments and central bank digital currencies. And for those of you that have been around the blockchain space, I'd say that every blockchain year is like a dog year. So I feel like I've been in this space for a very, very long time. Looking forward to being here, and thank you for having me.
Great. Hi, my name is Eric van Miltenburg. I am the Senior Vice President of Strategic Initiatives at Ripple. And I've been at Ripple for just a little over 7 years, having a variety of roles around the time. And I agree, dog years is an understatement in terms of what's happened over that period of time. Ripple is a company that provides blockchain and crypto solutions for enterprises. We started off, our sort of insertion point is around payments, so certainly very relevant to this conversation, but we really see that as a first step of providing a sort of portfolio building blocks that allow us to help enterprises unlock the power of blockchain for their particular use case. So looking forward to the conversation. Again, thank you to Emma, thank you to Sandra and GBBC. It's great to be here.
Great. Well, thank you for hosting this great event. Congratulations to GBBC on another awesome Davos. My name is Todd Fox. I lead the global public policy team at Visa. I'm based in San Francisco. Visa, of course, is operating in 200 countries and territories all around the world. We are a payments network. We move lots of money in many different ways, some that consumers interact with and some that are more of a B2B nature. And when we think about the opportunity to get together in an event like this, it's just a really exciting moment in time, because I think a lot of the different things that we've all been doing in the public sector or the fintech space and some of the larger players in traditional finance, it seems like a lot is really coming together. So happy to be here.
Brilliant. Well, we're very happy to have you all. Thank you. Todd, we're going to stick with you if you don't mind. I'd like to ask each of the panellists to talk through what your organisations are doing in the space at the moment, and maybe explain a couple of examples to the audience, please.
Well, in the space of cross-border payments, Visa has been doing a lot, and that's been going on for about 70 years. But when it comes to maybe a few of the innovations that are very top of mind for people at GBBC and here at the World Economic Forum this week, I would talk about a few really interesting opportunities. So there's this amazing movement toward the tokenization of bank deposits and central bank digital currencies. A lot of energy is right now going into how to make those different systems interoperable. And so we're really looking at this from a perspective of making all these new form factors compatible with the way that money moves around today, looking at traditional financial institutions and also all kinds of new use cases, two of which that I'm very excited about, happy to get into in a little more depth if time permits, would be small and medium-sized enterprises and agricultural payments. But the fact is, there's a lot happening in the card space. There's a lot happening in B2B, and there's a lot happening in digital remittances, all of which is going to benefit from good conversations like this one around how we can bring more innovation into the marketplace more quickly with the right levels of governance and trust.
Brilliant, thank you. Eric?
Sure. I kind of started to touch on it in my introduction, but Ripple for the past probably 7 or 8 years has really been working with mostly financial institutions, always with businesses, so we're a B2B company, to provide technology that allows for more efficient movement of money cross-border. And we've done this sort of in steps, always listening to our customers and always working with regulators around the world. First, it really was about trying to form a better messaging system, sort of something that updated the SWIFT approach in leveraging cryptography and blockchain technology to make that real time, to sort of address some of the challenges that are inherent with a system that's been around for 40 or 50 years. That didn't involve cryptocurrencies. That didn't involve really solving the liquidity challenge associated with cross-border payments. But over time, as our customer base got more comfortable with the technology and saw the opportunity and saw that we were able to abstract the complexity away and really just deliver the benefit they were seeking, we then sort of went to this next step, which was addressing liquidity by leveraging a digital asset. In our case, we use one called XRP as a bridge currency between really a fiat transaction. So from the end user's perspective, they didn't really understand or need to understand that crypto was involved. All they saw was faster, it was cheaper, it was more reliable, it was available 24/7. So all big improvements on what was happening before. And so we're continuing to move down that continuum, if you will, and we're taking more and more of the complexity on our backs, getting even into the flow of funds as opposed to just providing a technology. So we're licensed now in many states in the US. We have a BIT license in New York. We've applied for licenses throughout the world. We have our major payments institution license recently granted by the MAS in Singapore. So over time, we really want to be that go-to place where you can move money quickly whenever you want, however you want, and then start to layer on these other building blocks, if you will. So custody, I heard was mentioned in the prior panel, super important. We made an acquisition there last year. A Swiss company actually named Medico is now part of the Ripple family. And you can imagine tokenization is on the list, et cetera, et cetera. So anyway, I'll stop there. I'm sure we'll get into more of the details, but that's kind of a synopsis.
Absolutely, thank you. We're definitely coming back to that. Daniel, please.
So maybe a quick, and I always forget to mention that I speak on behalf of myself and not on behalf of the organization. So now that that's put aside, I can open up a little bit about what we're doing. So we're working a lot in the cross-border payment space in general. And maybe if I take a step back and explain kind of what the mandate of the hub is. In the previous panel, I heard that there's a little bit of fatigue around POCs and all these projects, and it's all about real value, and I very much agree. But one of our mandates is actually to do kind of horizon scanning and try to bring technology that's being proved out in the private sector into the public sector, where sometimes it's a little bit harder to experiment with these type of things, and really understand what that intersection is between these new horizon, new technologies. And it's a lot now about AI and convergence, and David did a wonderful job of opening up this conference with that. And really looking at those things and pulling them into the public sector space. So when I think about cross-border payments, I would say that probably the biggest divide is between retail and wholesale applications. So I'll try to give a couple of proof points on both. So when we look at retail central bank digital currency or digital payments in general, I think one of the things that we're focusing on is, of course, kind of payment efficiencies at a domestic level. We're looking at programmability of retail transactions. We're potentially looking at how we can use central bank money to give retail investors the ability to settle for digital assets. There's a lot of discussion around digital assets, but if you don't have the settlement medium, that is somewhat of a prerequisite to actually making use of these digital assets. Then on the wholesale side, that kind of connects a little bit more into the cross-border space. We're doing a ton of work on wholesale. Some of our big projects looked kind of like traditional, I say traditional, but traditional kind of only central bank digital currency cross-border payments. So one-way payments, two-way payment versus payment, where each payment executes atomically against each other. We've done a whole kind of swath of those type of projects. And now I think the projects are extending a little bit farther to include digital assets, potentially commercial bank tokenized deposits, and things like that. So if I have an opportunity, maybe we can build on some of the most recent experiments.
Perfect, thank you. Eric, could I ask you, what issues or inefficiencies are we seeing in cross-border payments that blockchain or other emerging technologies could address, and where are we seeing traction in that?
Sure. I mean, it's sort of the mantra for Ripple of what we're trying to address. I mean, we got into this with a vision that stayed consistent from the start, and that's about enabling the Internet of Value, trying to let value move around as efficiently as data moves around the Internet today. And if you look at where the pain was the most acute, we saw that in cross-border payments. And what are some of those pain points? They're probably well known with this group, but one, it takes a long time. You know, oftentimes to sell a cross-border payment can take 3 to 5 to 7 days. There's failure rates, 5, 6, 7% in some cases, which is kind of astounding when you think about it. The costs, just taking remittances as an example, costs are 6 to 7% to send a remittance around the world. These are the folks, in terms of remittances, that probably are least able to, sort of absorb that type of cost. Things aren't available real time 24/7. So if you're a company that needs to move money and there's a bank holiday or there's something else, you're stuck. So all of these things in and of themselves are significant problems. When you add them all up, they're quite daunting. And so for us, we want to address that problem. And the traction, again, I can speak for Ripple. The fact that we have hundreds of customers over the life cycle of Ripple, we've done 27 million transactions, over $55 billion of volume moved. So we have, this is well beyond, per the earlier comments, sort of a test bed or a proof of concept. We're out there moving real money. We have for years. So I'll stop there, but I'm sure the other panelists will have some ideas.
Thank you, Eric. Todd, what are you seeing?
Clearly, there are many areas where cross-border payments work pretty well, and a lot of areas where they need to get way better. And I think that when I look at it, I see a lot of areas where the good news is cross-border payments is a topic on the agenda when important conversations are happening. So I have the privilege of serving on the Financial Stability Board's Legal, Regulatory, and Supervision Task Force for Enhancing Cross-Border Payments. And what's really interesting about that work is when the G20 kicked it off, the idea was wow, cross-border payments, remittances, very, very expensive, settlement, very, very slow and liquidity intensive. What if we got a group of people from different kinds of financial institutions that sit at different layers in the finance stack globally, as well as policymakers, and tried to have some conversations about where the frictions really are. And then geopolitics intervened. And if you think about the drivers of cross-border money movement, it's international trade has to happen, and countries have to be moving money between and among one another because of greater openness to value exchange. And what's really interesting is that did not, the fact that we're living through maybe a once in a generation moment in terms of geopolitical fragmentation, progress is still being made on cross-border payments because of, I think, conversations like this one, but also because there's a genuine confluence of factors. Technology that has been around for a while, digital assets, blockchain, is now reaching that critical mass and escape velocity where you're able to deploy it in really specific ways that remove friction and pain points for real people in real places. So an example of that, with Visa, we're working with AgriToken in Brazil to take all these small farmers that used to do a kind of version of factoring that had been around for 100 years where they say, look, let me get some cash now, and in exchange I'll give you a contract on my crop at a huge discount. Well, maybe you didn't need your entire crop to be discounted. Maybe you only needed a little bit of cash now, and you could have done it with a small percentage of that total bounty from when you sell your soybeans. Well, this is something that is now possible because of digital asset technology, and really deploying that in a very specific way is something we're really excited about. When you look at things like remittance payments, this is, in fact, a matter where I think digital assets have a lot of value to add. So do things like push payments, where we're seeing, if you can take a remittance payment and break it down into the component parts, like where cost is added, a lot of that has to do with taking something in and out of cash, physical currency. So if you can do it digital end to end, whether you're doing it with a digital asset solution, Visa has something called Visa Direct. We can push the money to an account, but that's where we're seeing real progress toward those G20 roadmap targets of bringing the cost of remittances down to something in the ballpark of 3%. The Visa Economic Empowerment Institute, which is a think tank that we run out of my team at Visa, we've done some really interesting quantitative work on the cost of remittances and what's driving them down, and clearly digital is the thing that's driving them down. And in a world of geopolitical fragmentation, we need more of that digital transformation to happen faster. So I'm really excited about many of the different things that are happening. And I couldn't agree more. It started out with like proofs of concept and pilots, but we're really seeing this stuff scale. And that's a very beautiful and exciting thing. But there's still a huge amount of runway.
It is all very exciting. Thank you. Daniel, what are your thoughts?
Yeah, maybe I can add a little bit to that. At the risk of being a little bit controversial, I would state that the problem with cross-border payments is that they don't exist. Really, digital cross-border payments don't really happen. Money is localized in a domestic context, and the notion of a cross-border payment is somewhat of a veil that's put over the system. So the problem is that they don't really exist. So let's start from there. When the system came into existence, the notion of a cross-border payment was done by the private sector, and it works well depending on where you are and what you're trying to do. So maybe from the central bank's vantage point, the question is, what role should the public sector play in supporting cross-border payments? And I think that that's kind of our starting point. Now, as you guys well stated, it really depends on where you're located and what your use case is. Remittances came up because remittances have the worst inefficiencies possible. I think I've seen numbers up to 7 or 8% per transaction, which is absolutely crazy. And then when you move from there into kind of normal retail and then to wholesale and then lastly to kind of large sum foreign exchange, it slowly gets more and more efficient, but still ultimately you're synchronizing multiple databases and multiple technologies and multiple regulatory environments, and all of that kind of culminates into the inefficiencies that we see. So when we think about the role of central banks, the role of M0 money, and what we can play in the context of moving value across borders in the form of a cross-border payment, the idea is that we can essentially kind of harmonize a lot of these things to produce a more efficient chain of transactions, maybe even independent of the value and volume that flows through the corridors. And just for a sense of scale, when you are in a corridor that has a lot of value and volume flowing both ways, that is cheaper to operate as opposed to maybe the remittance corridors, which was implied that a lot of the value is very small nominations in a lot of transactions, and most of the value is moving from A to B and not from B back to A. So again, it's very contextually dependent, but there's a lot of improvement to make.
Can I jump in here? So, I mean, I often say, like, if we could only solve international settlement, then cross-border payments would exist. but I think you're right. I mean, the Bank for International Settlements is doing amazing work to solve those exact problems. Like, if we could live in a world where not just the technology, but now we're getting into legal frameworks and governance, because at the end of the day, settlement finality is a legal construct. It's not it's a piece of software that you write. I mean, software helps, to be clear. But there needs to be some sort of way where, as the tokenization of everything becomes real and money becomes programmable, and you can do that atomic settlement in multiple currencies, in central bank money, in commercial bank money, there will need to be some governance around this as well. And I think that your colleagues and you yourself, Daniel, at the BIS have done excellent work to really make this the conversation that's happening right now in cross-border payments. And I think companies like Visa are really excited to be involved in it, because if you go back 40, 50, 60 years, there actually have been examples where the industry needed to come together and solve some kind of a version of this problem. And there are many well-known brands today that have their start as some kind of a consortium or a mutual organization that's bringing together people that sit in different geographies to think about how to not just do the tech, but the rules and governance around it. So I think that this is one of the areas where disproportionate impact to society and the economy overall, if we can get it right. And I feel like we're right on the cusp of something great.
Me too.
Daniel, what role can CBDCs play in the future of cross-border payments? What are the advantages and disadvantages? And then just tagging on as well, what's the appetite from governments for long-term use?
That's a loaded question. Okay, maybe I'd preface it by saying that CBDC and central bank money in general is not the primary instrument used for payment in the economy. So I think the real question is, what role can CBDCs play in supporting commercial bank money in the broader context? And that probably isn't focused on enough. I think that that's really just kind of getting started now. I think it's well understood what CBDCs can do in their own sense, but then you get into all kinds of liquidity, credit provisioning, regulation, and impact on the banking sector at large. And by and all, I think that the private sector should maintain the primary participant in cross-border in payments and in cross-border payments in particular. So probably the biggest impact that CBDC can play is as a enabler to commercial bank money. But in its own right, CBDC can provide maybe a lot of those harmonizing layers at a technical and potentially also regulatory and legal structure. Some of the things that we're looking at in our experiments are things that were mentioned here before, so instant atomic settlement. There's an idea when you think about kind of cross-border payments and the chain of correspondent banks that as a payment hops from one correspondent to another, often the path from the payee to the payor isn't known in advance, or there's some rough estimates that could be true, could not be true, and there's a lot of compliance and pricing issues around those type of things. So what we're looking at right now, for example, is understanding the route of a payment and then executing the entire payment route atomically is a good example just on the payment level. Also looking at kind of FX and price formation and how that happens. So we had a project that we just recently finished called Project Mariana, where we used automated market makers to look at how we can pool different central bank digital currencies together to create pricing formations using automated market makers. I'm sure this crowd knows all about that. We've looked at some privacy components. There was a project called Project Tourbillon that is started from a retail context but could be extended very easily to an international cross-border payment context, where we use something called blind signatures to have one-sided privacy. So you can think of a transaction where the payee's identity and circumstances are kind of blinded from the wider context of the transaction, so you can know who the payor is, but not the payee themselves. And those are just to name a few.
Brilliant. Thank you for running through those. We have about 12 minutes left. So moving on. Todd, how can a more efficient cross-border payment system benefit economic growth and also financial inclusion?
I would start by saying the data are unambiguous, that digital financial services is the thing that drives financial inclusion. Okay. So we're not just talking about cross-border payments, we're talking about just the movement from physical cash to some digital form factor is going to give you a more inclusive financial system. There's a whole host of reasons why that's the case. We talked a little bit already about remittances. That's an example where people that are not presently well served by the banking system need an alternative means of receiving and sending a remittance payment. I talked a little bit about the technology and the governance of this. The Visa Institute hosted a session on the margins of the IMF meetings in April. We had a group of central bankers come together and talk about how we can enhance cross-border payments. And a central banker from a large Latin American country said, look, if my citizens working in the United States can't go into a bank and get an account, then all the technology in the world isn't necessarily going to solve that problem for them unless there are some like good regulated alternatives that can do some version of cross-border money movement. So I think solving some of the root cause issues that cause people to be unbanked and underbanked is job one. And then once that regulatory framework starts to become a bit more conducive, then I think there will be a big unlock in the form of what not just the private sector can do as like individual companies and individual innovations, but this ecosystem approach will really kick in. So we're already starting to see a version of this. I've mentioned it a few times already, this idea of digital remittances. Small businesses, you can think of them as another category. They're not exactly unbanked, but they're not totally covered in terms of their money movement and value exchange needs when you think about a cross-border supply chain for a what we call growth corporate. Some people would call like a middle market kind of company. So sub $1 billion in revenue, they need to move money around the world. And there are some financial institutions that want that, want to serve that business, but there's a lot more value that can be unlocked, especially if you start thinking about the multilateral money movement system that exists more for consumer payments and retail payments today. Bringing that system into B2B would be amazing. So at Visa, we have a product. It's called, or a platform. It's called B2B Connect, and it brings a sort of a multilateral money movement infrastructure to these B2B payments, and that's becoming a real unlock. It happens to have some blockchain behind the scenes, but I think that when we think about that product, we talk about a lot of pain points, use cases, and the value that can be generated through multilateral systems. Again, frameworks, legal constructs, rules, processes, a brand, and then we figure out like, okay, what kind of ledger are we going to use? And we got to blockchain that way. So I think that is a sign that the space is growing up and that the best is yet to come. But yeah, I would say remittances for consumers that are not well served by the financial institution and current financial institutions today, and B2B for that small business long tail segment. Those would be two areas that I'm really excited about.
Perfect. Thank you very much.
Just jumping in briefly, I very much agree with Todd. I think the opportunity is to more level the playing field. I think there's a lot of power held by the largest financial institutions in the world, the global money center banks. As a result, I think in the previous panel, one of the panelists said, hey, if you show me a business model that works, people are going to jump all over it. And for some reason, they're not seeing the business model that feels like they're going to make money serving some of these parts of the world. So I think this technology, specifically blockchain technology, is going to help democratize that in a way, right? It's going to make it more attractive for these large institutions and smaller institutions to serve markets that otherwise were not really palatable from a P&L perspective. So I think that, yes, it's remittances, but even if you're a small, medium-sized business in a country, you're competing against these large multinationals, but the rates that you're borrowing money, the rates of FX as you're trying to move money around, you're not able to compete. So how are you going to grow? So I think finding a way to break that kind of logjam, if you will, is really key. And I'm very optimistic that this technology can help make a big difference. It's going to take time, and the regulatory piece is not to be taken lightly, but I think there's a lot to be said for that.
Good. Okay. Thank you. Daniel.
Maybe you want to do, I feel like we're slowly kind of going up the stack a little bit. So I completely agree. Maybe I'll build on that as well. We talk about financial inclusion. We start talking about individuals, and then we start talking about businesses. And I would kind of urge to also think about countries being financially included or actually financially excluded. There's a lot of research that tracks the relationships of correspondent banks. And over the last couple of years, there's been a serious retreat of correspondent banking relationships as a function of de-risking their operations in different regions. So when we think about, particularly about M0, central bank money, and maybe providing a level playing field, to borrow your term, it's really a level playing field at a country level, and that will, of course, cascade down to the businesses, to the private sector, and then hopefully all the way down to individuals. A great example is CLS supporting only 18 currencies. If we think about CLS, that provides payment versus payment atomicity, so it eliminates settlement risk. So essentially, if you're not part of that group as a currency, you're somewhat disadvantaged when you think about international movement of funds. So democratizing access to a CLS-like function would be incredibly advantageous for countries that are otherwise left out.
Thank you. We've got 5 minutes left. So what I really wanted to get your thoughts on, we've heard a lot about the innovations that are taking place and proposed solutions, but what do you think it's really going to take to implement these solutions effectively for cross-border payments? Yeah, please.
So we're going to solve cross-border payments. 5 minutes, guys. Go. Synchronize your watches. I think there's never been more political will to solve this problem. I think the technology has ripened to a point where people are no longer terrified by something just because it's new. you might disagree. They're more terrified than they should be, but they should be more courageous.
There's self-inflicted wounds as an industry, right, that have happened and have caused people to be scared. And so I think we're going to need to see more good actors that are acting, responsibly, that think about compliance first and foremost versus, it's some bother that I have to deal with. We need governments to step up and provide regulatory clarity. I think we see some great examples of that around the world, in Singapore, in the UAE, in the UK, not so much in the US. And so, if you have clear rules, you have people who follow the rules, and then companies can innovate and invest with confidence that there's going to be an ROI, and they're not going to get rug pulled because some government who hasn't chosen to sort of be explicit about what you can and can't do is going to surprise them. So it's a combination of things, in my opinion. And at the end of the day, obviously, a good product, good service that solves a real world problem, provides real utility. It's not just about speculation and get rich quick and pumping up the price of crypto. I mean, all these things will line up. I think they're starting to line up. I see the companies are really stepping up. Certain jurisdictions, certain governments are stepping up. So I think a lot of reasons to be optimistic coming out of what was maybe a year ago, some reasons not to be very optimistic.
Agree.
Yeah, I would echo the optimism, definitely. I think when we think about payments, we need to think about networks, and the kind of defining factor of networks is that the more things are connected, the more value there is to the network. So when we think about kind of transitioning one network to another network, there's going to be some type of critical mass and some kind of tipping point and threshold at which there is more value in the new network over the old network. And I think that that's kind of what we're all kind of circling around, is in different business contexts. I think we understand that there's desirability. The G20 was mentioned. That's a huge motivation and desirability for these type of payments to improve. I think it was mentioned that the technical feasibility of most of these things has been proven, both in the public and the private space, and now it's all about the kind of business viability. So as more and more businesses become viable in this space, I think that'll pull in more actors, it'll pull in more value, and when these new type of networks start to hit that threshold, I think we're going to hit that tipping point, and then things will just kind of happen somewhat naturally from there. So I'm definitely optimistic.
And even though I'm the one that has been cheerleading this process, I think that we should speak up for the things that might go wrong. Because I don't want anybody watching at home or in the room to be like, wow, the BIS visa, and they think that the world's just awesome and Ripple's going to solve it. But obviously, this is a hard problem. Otherwise, it would have been solved a long time ago. And one of the big issues that comes up is like the compliance cost. It's not like some greedy banker is sitting there being like, I'd love to help all these poor people in an emerging economy, but I'm just going to use the limited resources I have for something else. I think that there is a genuine concern that leads to that de-risking, and there is also a sense that that is getting worse. So to speak up and sort of strike a blow for the money center banks in the audience, it's not like we're all saying that the old system has to go away for some new thing to be born. I often liken, enhancing cross-border payments to movies because I'm a film buff. And I would say, there's this idea that the paradigm has to change. So you go from like Blockbuster to Netflix. That's the way innovation works. But in fact, like it may be what we're really talking about is like bringing in 3D, making the current film going experience just so much better that generates all these additional value opportunities in these adjacent industries. And I think that once we start to see the movement in that direction, then we'll see, the Avatar and Avengers Endgame of payments. And that's when it really comes together. But I think that right now there is, to be clear, still a lot of uncertainty around like how the regulatory framework is going to look.
Absolutely, I agree. I think we have 1 minute, Dimitri, if you have a very quick question. Did you? Yeah?
The challenge of the fragmentation of the payment system or the unbankable people is not a distant problem, even for territories like European Union. During my service in Econ Committee in the European Parliament, I realized that 15% of the European Union citizens are unbankable, and that the system of payments in the European Union, despite the monetary union, is super fragmented, and Libra showed us the ugly truth. In this environment, we introduced the Payment Service Directive 2. We started talking about the open banking, and now in the European Parliament we have Payment Service Directive 3 and Payment Service Regulation. Very briefly, I would like to ask you to which extent the conclusion of the open banking regulation and framework of the European Union disrupts the business and operational models of the gentlemen of the industry, and what kind of systemic risks you see in the open banking environment as BIS. Thank you very much.
I could give you a really quick answer. Open banking is happening all over the world. It's happening because APIs exist and because fintechs exist and banks are figuring out how to navigate in this world. Where we've seen a regulatory-driven approach in Europe that created a lot of momentum around a particular variant of open banking. I happen to live in the United States. I live very close to Silicon Valley. People don't think there's a regulatory driver. Open banking is happening because of market forces. I think the fact is countries differ in the attitude of financial institutions toward this regulation. In some places they'll move before regulation forces their hand. Some cases they won't. And I think we're just seeing right now everything we've been talking about in terms of collaboration between the public and private sectors, between large and small financial institutions, between incumbents and disruptors. I think that's all playing out in open banking as well. So I don't know if that's a satisfying answer, but I would say that's an area where in some ways the technology is ahead of the governance also. And so bringing some greater clarity around the rules of the road is probably a directionally good thing. But yeah, I mean, open banking is kind of the new normal in the United States and has been for a while. It's just there's not a regulation unlike PSD2 that forces it to be so.
I'll quickly comment. I can't really comment on the perspective of the BIS on open banking in particular, but what I can do is contrast open banking with some of the discussions that we're talking about central M0, tokenized deposits, CBDCs. Open banking is kind of an overlay on top of the existing payment system. I think one thing that we can do is look very carefully at the implementation and the regulation around open banking and think about how we don't embed that, use that as an overlay, but rather embed that in the financial instrument itself. So hopefully all the things that were somewhat full of friction in the open banking implementation, which I think took a long time and is still taking a long time, we can hopefully do better in the next iteration.
Brilliant. Thank you. We have to end here. Thank you so much to Daniel, Eric and Todd. It's been a real privilege to be on a panel with such leaders in this space and really appreciate hearing your thoughts. I think we do have lots of reasons to be optimistic, although obviously there is a little way to go.